Good evening, everyone, and thanks for joining us today for our online chapter education committee. Every other month, I forget what that's called. It's not bi-monthly, but it's every other monthly open forum workshop. The third Wednesday of every odd month, we present some topic that's hopefully of interest to Better Investing members. And tonight our topic is ETFs, the benefits, the drawbacks, and how to use them for stock screening. Now, we originally asked Henry Gold, who's done this presentation before, to do this for us, but he wasn't able to, but he shared all of his slides with us. And we use that plus information we got from Investopedia and from our own knowledge to create the slides that you're going to see tonight. I want to just introduce the members of the online chapter tonight. So there are four of us in the education committee. We have Sriram Madhabushi, myself, Chris McCarron, Dan Perlman, and Phil Sudore. Sriram, Dan, and Phil are very experienced investors, and they've been very active with BI for many years, so we're lucky to have them as part of the group. Sriram, could you go to the next slide, please? This is our usual disclaimer. We are going to talk about specific stocks today, or actually specific ETFs today, but we're not telling you that you should run out and buy them. We're just, as always, sharing information with you. One of the joys of Better Investing, one of the great things about being a better investor is that you have lots of tools to do your own research. And that's what we recommend that you do. Maybe it's not clear. That's strange. Is anyone else having trouble with the video? I just got to note that the video wasn't clear. It's clear on my screen.
Video is okay. I think the audio is coming and going. So,
okay.
But that's okay. I think you just continue and finish this.
Well, I'm done talking. So I'd like to now turn it over to Dan Perlman, who's going to start our ETF presentation. Take it away, Dan.
Thank you, Chris. Next slide. So this is our agenda for this evening. The first thing we're going to do is we're going to talk about what are exchange-traded funds. And then we're going to compare them both with mutual funds, which are in many ways very similar, but do have important differences. Then we're going to compare them with just individual stocks. We're going to talk about how to be a BI investor who wants to use ETFs. This is not the primary way that BI investors typically invest, but we think that it has a place that may be very beneficial to people who have a more BI investing style. Then we'll talk about the considerations when you're going to get an ETF. And finally, we're going to talk a little bit about how, if you want to find an individual stock that you'd like to invest in, you can use ETFs as sort of a stock search system. So those are the parts of our agenda for this evening. Next slide. What is an ETF? Well, it's an exchange-traded fund. That's what ETF stands for. It's a basket of securities that trade on an exchange just like a stock. A couple of properties I'll mention here are that you can trade it all day. You can't trade mutual funds all day. And the price is usually just what the underlying value is of that basket, but it can change a little bit. It does often change a little bit because they don't reinvest the dividends at the time they come in often. They often do that every 3 months, every quarter. And during that period of time, the ETF's price may slightly vary from the underlying value. ETFs often track a particular, we often think of an index. It doesn't have to be an index. It can best be some set of stocks or commodities that are specified as what the ETF invests in. It can be a sector, it can be a commodity, and in this sense, it's like a mutual fund. So it can, you went too quick. It can be structured to track an individual thing like a commodity or a large, diverse collection of securities. You can get a total stock market ETF. And they also can track specific investment strategies. I looked to see if I could find an ETF that tracked better investing, but I wasn't able to do that. But there is an Eagle Capital Growth Mutual Fund if anybody wants to have a mutual fund that uses a better investing philosophy. Next slide. So there are passive and active ETFs. Now, all of them have to have some specification of what their objectives and goals in and what they're going to invest in. But the way I think of a passive ETF is that it's basically an algorithm. Once you know what it's going to do, for example, IMIC, the S&P 500, there's just a computer that puts together an index based on what are the stocks and the rule for how to weight them. And when the ETF, when the S&P changes, then the ETF follows that change. Sometimes when stocks go out, if you're an individual holder of that stock, the stock will go down. Sometimes when they're added, the stock will go up. But the ETF just is a computer program once it's programmed. With actively managed ETFs, the portfolio managers can make more decisions. They can decide, oh, we don't want that stock in it anymore. We want to have a little more cash in reserve. They have choices that they can make. And I think also you can think of this as an individual investor. In a way, I think of holding a group of ETFs as letting somebody else do it, as opposed to being more active and deciding on your own stocks. So now to go to the second point, and really the other points in this slide. There are ETFs that are just have bonds as the things that are in them. There are ones that have stocks that are in them. There's a large variety of ETFs, and they can follow industries, sectors, investment philosophies. There's just a lot of them. Next slide. So here are some different types. So you could have commodities like crude oil or gold. You could have a currency, for example, if you want to have an ETF that speculates on the value of the euro or the pound, I think that you could get those coins. You can have either inverse or leveraged ETFs. Now, what these are is they're sort of like the index ones, but quite different. Instead of actually holding the commodities or the stocks that are in what you think of as the index, these are people who use investing strategies in the hope, just like if you put in a short order, uh, you shorted stocks, et cetera, and did that. Uh, these ETFs use those kinds of techniques in the hope that the changes in the value of the underlying thing that they're tracking will change, and you can find ways of profiting more than otherwise would by using these strategies. And then finally, there are these index ETFs. They follow things like the Dow Jones Industrial Average. There's one that follows the 100 non-financial stocks on the NASDAQ. There's more than one that follows the S&P 500. There's really two types of those. One type follows them with the underlying stocks being weighted according to their market capital. So a stock that has a big market capital is weighted more heavily in that version of the S&P 500, whereas another version of the S&P 500 says will equally weight. If some company has 10 times as much as some other company in the S&P 500 in terms of market capitalization, they'll get the same weight. And in recent years, the equal weighted S&P 500 indexes have actually done a little bit better. Whether that's always the case or not, I can't guarantee, but it has been a tendency. Next slide, please. So I've talked about index funds as passive investments. They have certain advantages because they have a big basket of holdings. They have the capacity to reduce company-specific risk. If you have a company that for some reason tanks, and that's the company you hold, you have a big holding in it, you can take a big loss. But when you have 30 stocks or more, or whatever they've got in their index, one stock going down is not going to have such a big detrimental impact. What ETF index funds do is they mirror the index that you're following. So you're not going to exceed what the average of that index is usually. It's going to come out virtually. The correlation is going to be extremely high with what the actual index does. But, and this is something that if you invest in mutual funds with fees, you will see mutual funds with fees typically do not beat the index averages. They typically perform. The more mutual funds underperform index than overperform them. So your chances of meeting the index are higher with an ETF than they are with a mutual fund. And here are three that I actually talked about before. The QQQ is the 100 biggest financial stocks, non-financial stocks in the NASDAQ. The SPY is an S&P 500 one, and the DIJ is the Dow Jones Industrial Average. So those are index ETFs. Next slide. And here you can see the categories of ETFs. You can have country ETFs, region ETFs, currency, commodities, metals. You could have a set of stocks that just mirror medical device companies or something like that. Short positions and weighted sectors, fixed income, value stocks, growth stocks, large, small, medium stocks. There's just a lot of categories, over 90. So now I think I'm going to turn it over to Sriram, and he's going to take the next slides that we're going to see.
Thank you, Dan. Good evening, everyone. So in the coming slides, we look at some of the ETFs and how they compare to other measures or other investment methods. For example, if you look at ETFs versus mutual funds, there are similarities, but there are also distinct dissimilarities or comparisons will show. As Dan pointed out, these ETFs are traded like stocks. You can buy anytime during the day. You can put an option or limit order. So all those things are just like a stock you can purchase and manage. Whereas on the other side, in the mutual funds, of course, you have to buy and sell once a day. Transaction costs are there. Some of them are somewhat expensive. And then again, the periodic transaction costs, those are sometimes that can add up. That's why we want to look for, no load. The fees are either limited or no fees. There are also minimum requirements you have to meet for purchasing mutual funds. Whereas on the other side, ETFs, they don't have any loads or penalties. And these are more tax efficient because you don't have to worry about every time something changes, somebody is going to charge you something for it. So in big picture, this is the difference between ETFs and mutual funds. When you compare stocks to ETFs, again, these are very similar. For those of you who are all part of the BI, we have tools and ways to analyze and to compare and to select stocks. Whereas on the ETF side, we do not have much of a record of ETFs except for the performance over their period. These are, especially for just like index funds are, or index stocks are, you can understand that these are great for investors who are new to investing, or even people who don't want to actively manage. These ETFs are better for them. Again, if you buy and just hold on to them, they do their work. Whereas when it comes to stocks, you may want to keep an eye on them and constantly watch them and make sure the progress they make in the stocks, they meet your expectations, they meet your goals. Again, you are being your manager of your own stock portfolio, you will have flexibility and you don't have expenses like ETFs have. Again, some of the ways we can think about ETFs, how we can put into our portfolio. You can start a portfolio of your own using index ETFs. Use this as a diversification attempt. Basically, if you have a sector that you're not very familiar with, you can go to this ETFs and try to figure out if the sector is for you. And this will also help us in distribution as well as mitigating our risks within our portfolio. Again, if you don't want to actively manage them, this is one way of adding to your portfolio. Pick a fund and pick a ETF and just invest in that. Especially when you don't have much of a knowledge in a particular sector or particular industry, this will be good means of investing. Again, you can even replace your existing mutual fund using some of the ETFs because you're going to certainly save on fees you're paying. We're going to show you how probably you can even use it in identifying stocks from the ETFs to individually invest in those stocks. Again, we probably have already talked about some of this, passively versus actively managed ETF. Again, depending on your ability and your interest, you can choose what you want. Typically, actively managed will have little more fees than passive ETFs. Again, at the end of the day, like everything else in investing, what exactly you want to get out of your investment. The goal of your investment is what the goal of ETF. So based on that, you can come up with your own way of investing into ETFs. Dan talked about this capitalization and equal, fundamental, growth. These are all different ways to how you can diversify and distribute your ETFs. Tracking error is one of the things. Again, we want to make sure that when you purchase an ETF, you keep in such a way that you are making sure that you benefit from it. Another way of looking at how much the turnover is in the portfolio. More turnover, more up capital gains. That way, you want to minimize your turnover. And again, our ultimate goal is to keep your expenses low. Why do you want to keep your expenses low? Because ETFs have a variety of expense ratios. Some are small and some can be as high as about a percentage of your portfolio. So again, some of them, even though it's higher, they may be giving you more returns. So again, there's always a balance between how much it is costing you versus how much you gaining out of it. So how do you want to go about choosing an ETF? Just like stocks, what is your goal? What is your investment time frame? Are you planning for next 5 years or next 20 years? Again, are you investing it for a regular income, or are you planning to grow it and then use it in the future? Again, depending on your trading strategy, either a beginner or an experienced person, you can follow up and you can choose, you can build your ETF portfolio. Again, risk strategy, how much you're willing to take a risk. Some sectors are more risky than some other sectors, especially if you want to buy probably bank stocks today, probably it's a little more risky than a week or 10 days ago. Volume, how much of each of these ETFs are available? That also helps you. The more volume, the better or easier for you to make the trades. We already talked about these expenses. Well, it is better to keep your costs low. I'm going to switch gears and I show you a couple of ways to screen for ETFs. For those of you who have Morningstar has its own way to search for ETFs. If you go to their main page, you see the ETF screener here, and this will give you different options where you can screen for a variety of, either you want to base it on some particular sector or asset area. For example, say, if I want to look into US equity, you can see there are several of them that they populate, and you can filter them as you want. So if you want to average or above, that will certainly reduce it to a few. Again, this is a pretty decent screener. By the way, if you don't have subscription to Morningstar, you can subscribe through some of the public library. The one I use is, even though I live in Texas, I'm a member of this Fairfax County Public Library. And from there, I use that to actually look into getting either, they also have value line you can look into, or I can go into Morningstar, and from there I can access this website. So this is one way to screen for different ETFs. Another way is a free screener that's available on Yahoo. If you go to Yahoo Finance, you can screen from here also. You can add different kinds of filters and use that information to talk about using some of the considerations we already talked about. For example, if you want to look at long-term capital value, you can see a bunch of them, they are filtered. So again, there are ways in which you can screen your ETFs. One more way you can do this is, for those of you who have Manifest, you can actually use Manifest also to screen for stocks, to screen for ETFs. If you go to their main page and you can search for them and try to find them. Of course, you can also create your own dashboards and put your favorite ETFs and keep scanning for them, and when it is available and when you are ready to look at them, you can look at them. Going back to the presentation. Oops. There you go. So I went through the Morningstar, Yahoo, and Manifest ways of looking at these stocks. Hopefully that will help. You can actually also look at some of these ETF to pick individual stocks. How do you do that? An easy way to do it is to actually, probably, I think, go back to what I was sharing a minute ago. On any of these different tools, you have to screen for them. For example, if I go to QQQ and look at that, it will list you the individual holdings within that ETF. So you can, from there, you can select which particular industry you want to look into, and then you can select a stock and then see if this is something you want to invest in. So this is a way to screen for individual stocks within an ETF. hopefully this helps. Again, this way you can diversify, you can make your stocks better. I think that's my last slide. Any questions or any comments?
Thanks, Sriram. So yeah, at this point of the presentation, we'll take any questions if you want to unmute yourself or put it into the chat. I'd also be curious if anybody wants to offer up their opinion, either before or after the seminar tonight. If you have any strong impressions, either for mutual funds or for ETFs, and if any of the information you saw tonight helped decide one way or the other. Okay, Ron is asking, have you ever used ETF.com for searching? I don't know, Dan or Sriram, have you used that one at all, ETF.com?
No, Ron, tell us a little bit about it and whether you like it or whether you think that Morningstar or other sources might be better.
I haven't really used it enough. I just know as I bookmark it and I went out there and I do have a search capability. So I wasn't sure if it's better or worse. I couldn't tell you.
Good point. Yeah, I've never used it.
Okay. It's another resource. Anybody convinced to research ETFs? I know probably most people, I think, generally, two of the most popular PDFs or ETFs that we use are the SPY, which is for the S&P 500 ETF. And one of the other ones that's really popular is the QQQ, which we're not recommending either one, just offering up some examples. But the QQQ is more of the tech-related specific ETFs.
Yeah, you also see some of them are common to both.
Hmm.
The holdings. This is SPY. You can see the companies here.
Mhm.
I'm going to switch to QQQ. And some of those same companies are repeated here.
Mhm.
Yeah.
Well,
So
I was going to say at this point, if anybody has any other general questions, we can open it up to any questions, investing related questions that people have. Quiet audience tonight.
yes, a very quiet audience.
Okay, D. Bailey asks, do most mutual funds have an equivalent ETF? And if so, what are the capital gains like for switching to lower investment fees? Either of you want to take that one?
Well,
I will try and probably, hey, Dan, go ahead if you want to.
well, I'm not going to directly answer this, but a problem with mutual funds that you can run into is the years that the market goes up and down, and when you get increases in your set of assets in a mutual fund, and when you get taxed on those assets can vary. you get taxed on capital gains whenever they occur. And there are anomalies. Once in a while, you will find a year where you have quite a large capital gain tax, even though you don't necessarily feel the mutual fund has done anything terrific that year. It just means that they've sold stocks that they've held for quite a while, and you are paying on the gains that they've made. And certainly compared to the index funds, many mutual funds do more turnover. The rate of turnover in these index funds is, just the rate at which companies come in and go out of the index, which is pretty minimal. Whereas in a managed mutual fund, people may be buying and selling, a third of their stocks every year, or maybe even more than that.
Yeah, in answer to Bailey's question, I do not believe most mutual funds have an equivalent ETF. Some of them are similar, and many of them are very divergent, very different. Like Dan pointed out, again, our goal is to find those that require minimum fees. So that way, I'm pretty sure we will be able to manage. Yes, if you have, we can manage in our own way. Chris just added, anybody who wants to jump in, feel free to unmute yourself and please join the discussion.
I have a question regarding ETFs and being able to reinvestment. Is there any issue regarding that? Reinvestment, dividend reinvestment with ETFs?
I don't think so.
I was going to say, I don't do that, but that may depend on the broker. So if the broker where you have the ETF offers dividend reinvestment, that may be specific to where you have it.
Oh, one thing I meant to mention, I forgot, most of the brokers like Fidelity or Morgan Stanley, they all have ability to purchase ETFs through them. So obviously, just like a stock, you can reinvest as you feel it.
Great.
Yeah, Chris mentions that. I don't believe so. I've always done with my Vanguard ETF, so she's able to reinvest as needed. Good question, and
one of the advantages of ETFs is that if you have small amounts of money and you've got to pay, say, $5 on a $50 investment in a mutual fund, you lose 10% of what you're investing. But with an ETF, if you invest $50, there's no fee like that.
I mean, overall, I see it is a lower risk than a portfolio with different items in it, but also the reward is also, you cannot beat the average of a particular set of stocks. So you will not have really high winners and likewise very poor losers, So it's somewhat more of a stable approach to investing.
We could have a comparison between ETFs and mutual funds. Not getting an impression for how many people actually own ETFs. I would suspect that most of us own mutual funds in one account or another, but ETFs have some significant advantages in investing with ETFs. A couple of them were mentioned already.
Do you have other things, Bill, that you like about ETFs?
Over the years, I think I've grown to like ETFs much more than mutual funds for a lot of the reasons mentioned. But like I said, two of my favorites are the S&P 500 and the NASDAQ QQQ, depending on different things and diversification. I think it's great for somebody that's starting out with a portfolio that doesn't feel like they have enough information to invest yet. You can have immediate diversification with one of those as an investing in an ETF. And it's a great way to start, I think. Chris mentioned that also for people getting started, you can use ETFs in sectors that you don't know much about either. So instead of choosing just one stock, you could choose a sector ETF for diversification, because you don't know which one stock is going to be do the best. So you can get the diversification and be in the sector. Lately biotech has a certain amount of interest and with what's going on with the market these days. So that's another way to diversify and get into a sector without specifically choosing one stock.
Well, I have a question for the audience, and that is, do any of you have or have considered an ETF for a BI club portfolio? I'm going to direct this to Bob Boyle. Bob, is there any reason why people could not put an ETF in a BI club portfolio? I know there's some clubs avoid, for example, stocks that are outside the United States or something like that. But are there any reasons why an ETF couldn't be in a Better Investing Club portfolio that you can think of?
Absolutely no reason why not. I think it would depend on your club's investment policy document, which we hope all clubs do have an investment policy document. And that's would be how the partners would agree ahead of time as to what type of assets they want to hold. I think the only guidance that Better Investing and actually iClub provides to the club is do not hold a REIT, a real estate investment trust, in the club, because it's so complicated to be able to split up, what each partner's share is the thing. But otherwise, no. I know of two clubs that have ETFs, and they use that as a place to park their cash while they're waiting to find a stock that they want to buy. Better Investing's philosophy is to be fully invested all the time. Don't leave it just in cash. But there are a couple of clubs that I know of that want to be in a, particularly recently, be kind of in a cash heavy mix, be ready to, well, let me explain. The partners are looking in and projecting that, okay, we think there's a recession coming later on in the year. we want to be in a position to have cash to be able to invest in particular stocks that we're interested in. But in the meantime, let's put it into one of these ETFs, that would be certainly not guaranteed as far as the return, but the perception is that it would be money that you could get out real easily. In fact, you can do the sale and I guess next day buy a stock that you're interested in. But that was a long answer. The bottom line is there is no prohibition, and some clubs do have them.
Yeah, Dan, my reason would be, I don't know how to do an SSG for a ETF. That's why I don't have it in my club. I'm just kidding.
There are other ways to evaluate the investment, see how it fits in. I mean,
Yeah.
looking at the ETFs, you can look there and you can get stock ideas. As to, particularly if it's an ETF that focuses on a particular sector or industry that you're interested in, you can look and see what is there. An idea. Mhm.
In the BI publications every month we get this year, there is a number of stocks that are listed there with the buy-sell ratio. Can an ETF be just labeled next to each one of these stocks when they do come out? So, you right off the top, instead of having to do a lot of search, if you see that there and you're interested in one of those, that makes it a lot easier to then dig into it. Is that something possible that could be done?
Don't know.
Well, you could do an SSG for each of the stocks in the portfolio.
Yeah.
But that would be a lot of work. What we were looking at was manifest investing, and that is a fee for use website, but it gives you some particular information which is useful, at least. It gives you what they think is the growth rate of the stocks in the portfolio. It gives you the PE. It gives you the projected dividend yield. It gives you financial strength. That's kind of and quality. Those are a little bit related. And then it gives you a projected annual return. So, and I think if you go to Morningstar, you can also get, not exactly that same set of information, but you can get some information. So it wouldn't be easy to do an SSG analysis of the portfolio as a whole, but you definitely can get information from sources like this, or particularly Morningstar. And one of the things that I did was I put in the chat at the very beginning of the chat a couple of places where you can see a list of the places where you could get Morningstar or Value Line. The Fairfax Library, if you're in the United States, that's a very popular one to join, because it just has a very modest fee for a year's membership, and it has both Morningstar and Value Line. Some public libraries have one or both. They're pretty expensive for public libraries. But for example, I was in North Carolina, and the North Carolina state library system seems to carry it in the libraries that are affiliated with the state. So there are places where you can get it, but even if you're not in one of those places, you can get Morningstar, and you can find places that get Value Line.
Very good.
Yeah, I've got an idea for you for a future webinar if you're interested.
Yeah, please go ahead, Bob.
Oh, okay. That'll be using Morningstar. You know, you can get that most of the features in there free from the library, but there is a way to go in there and plug in the mutual funds that you may have in your portfolio. You know, I found a lot of people have, you know, you got stocks, but you also have mutual funds there. It'd be interesting to find out within the mutual funds, what's the dollar value of the underlying holding? You know, I played around with this a couple of years ago, and I was saying, geez, I wish I had more Apple stock. And I was thinking of, you know, doing a study and then maybe go out on buying Apple stock. And then I plugged in the thing, you know, the Morningstar's X-ray feature. And it looked like I had about $25,000 worth of Apple already. So it didn't make sense for me to go out and buy an individual stock. But then going down the list, you know, if you get another list starting off with what's the largest holding in your mutual funds, and down, you get down to around the $5,000, $4,000 range, you start to get some ideas as to what other companies you may want to study. And do it. It's a pretty good way to get a feel for what your overall stock portfolio is, because it's all stock, whether it's in a mutual fund or you own it directly, but it's all ownership of companies.
Good point. Yep.
We did a little research on that over the next month or so.
If you give me the screen for a second, I will just show you. I went to Better Investing. Oh, I went to Better Investing ETFs, and what I guess I want to say here is that if you go to the Better Investing website, there are both webinars that have been given, and there are articles that have been written that you can get from the Better Investing website, or just putting in Better Investing in plain old-fashioned Google and EFTs, and you will find that there's a number of these that come up that indicate where people from a better investing perspective have written or given webinars.
You have the control, Dan.
Okay, well, this is just where I went to Google, and you can see mutual funds and EFT, better investing, investor education. Dave Schwinga did a session at Bink in 2022. Henry Gold, who we used as a source, has done one. Here's another one, using ETFs to diversify a portfolio. Here's another one in Better Investing Education, potential opportunities ETFs offer. Here's just one that's got Better Investing Magazine. And so these are the kinds of things that if you go to Better Investing, I can go quickly to Better Investing, and let me see if I can get my member logged in. And we can go to the Learning Center, and well, let's just go to I'm having trouble getting to, I have things that are blocking my screen and
See if you can move them,
Yeah,
Dan, the ones that are blocking your screen.
yes. Right. Mutual funds and ETFs. Uh, ETFs offer potential opportunities for stock pickers. November 2019 issue of Better Investing magazines. Do you really need a souped up model? Uh, um, so March 2012, as changing their colors improve results, the ins and outs of investing with ETFs. So these are all either articles or things like that. In the March issue, I guess there must be something on ETFs because it's listed here. See what the context on. Well, I don't see anything that particularly looks like ETFs, but since it came up with ETFs, presumably there's something in here which talks about ETFs. So I do think, while it's not the primary focus of Better Investing in my mind, I do think that there are people in Better Investing who talk about it and who educate about it. So, and certainly just through Googling Better Investing in ETFs, there are at least a couple of webinars. Oh, another thing that I would mention while I'm here, if any of you have a Fidelity account, I got an email today from Fidelity saying that they are going to do three webinars on ETFs.
Dan, on page 30 of the latest issue has an article about ETFs.
Okay. Is that the April issue or excuse me, it's a March issue, right?
It is March issue.
You can see this enhancing your portfolio for 2023 and beyond with ETFs. Enhancing your portfolio for 2023 and beyond with ETFs. ETFs, flow and tell opportunities in ETFs for 2023. Buying into the market with index ETFs. Navigating a rapidly changing bond market with ETFs. So if you are a Fidelity client, you can register with them and see these sessions. I suspect if you wanted to, if you're not a client of Fidelity, you could probably get in, but I don't know that for sure. anyhow, I'll stop sharing. And we are reaching 8:30, but if we stimulated other questions or questions about things that really haven't been discussed, we do have a minute or more to just talk about whatever interests your fancy.
I was surprised nobody's talking about banks, all the stuff that's going on. Is it time to start investing in banks or just what?
It's one of
I
those.
personally, it's too complicated, so I
I
go
was
for the
gonna-
easy stuff.
That's a more advanced topic. It's kind of like REITs.
Yeah,
It takes a little bit more to get into do the analysis.
Certainly there are people in BI who tell you how to do the analysis of banks because you use somewhat different data to.
Joe Farrell is one of them.
Yes. There's been big sessions on that too, I know. But, I guess what happens is that there may be some concern about particularly the regional banks, and that may drop some of their prices. And the question, you always need to know whether you think it's going to rebound or not. And
yeah.
And again, instead of picking one, an ETF for the banking industry may be appropriate.
yeah,
for
yes,
diversification.
yeah, that certainly is true. And then this is one of the ways where one might want to use an ETF.
Mhm.
Boy.
All right, barring any other questions or comments, I'll thank both of you gentlemen for doing this seminar tonight. And welcome everybody back in May for our next one. Keep an eye on the Better Investing emails for details on that. And thank everybody for coming tonight. Appreciate it.
Very interesting.
Do we have a topic, Christine, for May that's locked in?
I believe we had talked about a topic. I don't have it right here.
We
But,
do have a topic, and I have to get back to everyone because I also don't remember what it is. I'm sorry. I emailed it out to everybody. So
Give me
hopefully
one
we can get
second.
it.
Give me 1 second. I can tell you. Bear with me for 1 second. It was in the online chapter bulletin that came out today. For May 17th, Alan Halsworth, who has done over 100 portfolio reviews, will share examples of mistakes and best practices to improve your portfolio health. Does it sound?
I've heard him. He's very, very good.
Does it sound that that's what you were thinking about, Christine? Chris?
Yes, thank you so much, Sriram.
Yes.
Short attention span here. Sorry.
No, this was in today's OLC monthly bulletin that came out today. Please take a look at that.
I think that's one of the more popular articles in the monthly Better Investing too, with the repair shop. So that's always usually a great topic.
Very good. Thank you very much for everybody
Thank you
listening to
guys.
us.
Right.
Have
night,
a good
everyone.
night.
Good night.